Imagine a world where money moves across borders in seconds. Fees are almost zero, and financial transactions are so secure that even the smartest hacker cannot break into the system. Picture a global economy where banks are no longer the gatekeepers of your money, where financial power shifts directly into the hands of individuals, and where every transaction is transparent, traceable, and tamper-proof. This is the emerging reality, shaped by digital currency and blockchain technology, a revolution that is redefining the future of finance, security, and global trade. The next decade belongs to programmable money, digital trust, and decentralized systems. Digital currency and blockchain represent one of the most transformative technological revolutions of the modern era, reshaping the way people store value, transfer money, verify data, and participate in the global economy. Digital currency refers to money that exists only in electronic form, without any physical notes or coins, and includes cryptocurrencies, central bank digital currencies, CBDCs, stablecoins, virtual tokens, and tokenized assets. At the heart of almost every digital currency system lies blockchain technology, a decentralized and distributed digital ledger that records transactions securely, transparently, and immutably. Unlike traditional banking systems, where a single central authority manages ledgers, blockchain distributes the ledger across thousands of computers worldwide, making it nearly impossible to hack, alter, or manipulate. Digital currencies are faster, cheaper, and more efficient than traditional payment systems because they eliminate intermediaries, such as banks, brokers, and remittance agencies. Cryptocurrencies like Bitcoin, Ethereum, Solana, and thousands of others introduce the world to decentralized digital money, meaning no government or institution controls the currency. Bitcoin was created to provide a peer-to-peer payment system that is resistant to censorship, while Ethereum expanded the idea with smart contracts, self-executing digital agreements that automatically perform actions when conditions are met. These smart contracts gave birth to decentralized finance, DeFi, where lending, borrowing, trading, and investing happen on blockchain networks without banks. In parallel, governments around the world began exploring CBDC, state-issued digital currencies that function like cash but operate electronically on secure digital systems. India launched the digital rupee, EARS. China created the digital yuan. Europe is developing the digital euro, and dozens of countries are testing their own CBDCs. Unlike cryptocurrencies, CBDCs are centralized and controlled by governments, but they offer benefits like instant transfers, reduced transaction costs, improved monetary policy control, and lower corruption. Stablecoins emerged to address cryptocurrency volatility by pegging their value to stable assets like the US dollar or gold, USDT, USDC, and DAI are popular stablecoins and are increasingly used for cross-border payments, online trade, and decentralized finance. Tokenized assets represent real-world items such as gold, property, art, or company shares in digital form on the blockchain, making ownership transfer instant, secure, and transparent. Blockchain works by recording every transaction in blocks of data, linking each block to the next through cryptographic hashes. The system relies on miners or validators who confirm transactions, maintain network security, and ensure the integrity of the ledger. Once data is added to the blockchain, it cannot be altered, which prevents fraud and builds trust. This immutability, combined with decentralization, makes blockchain ideal for financial systems, supply chain tracking, healthcare records, real estate documentation, insurance claims, voting systems, and government data management. Digital currency offers numerous advantages. Transactions are extremely fast, seconds instead of days. Costs are low, transfers are global, and there is no need for intermediaries. Blockchain technology provides unparalleled security since data is distributed rather than stored on a single server, making hacking almost impossible. Transparency increases accountability. Because every transaction is visible on the public ledger, digital currency also increases financial inclusion by allowing unbanked populations to transact using only a smartphone. However, digital currency and blockchain also face challenges. Cryptocurrency markets are highly volatile, making them risky for inexperienced users. Blockchain networks can face scalability issues when transaction demand spikes. Regulatory uncertainty remains a major obstacle because different countries have different laws. Some encourage crypto innovation, while others impose restrictions. Security risks arise when individuals use unprotected exchanges or fail to secure their private keys. CBDCs raise concerns about government surveillance, as authorities may track transactions more closely. Despite these challenges, the future of digital currency and blockchain appears extremely promising. Global adoption is accelerating, driven by rising digital payments, AI-enabled financial systems, decentralized applications, and increased trust in digital ecosystems. By 2030, experts predict that most countries will deploy their own CBDCs. Cross-border payments will rely heavily on blockchain networks, and smart contracts will automate legal and financial processes worldwide. Businesses will use blockchain for supply chain tracking, reducing fraud and ensuring product authenticity. Real estate transactions will become faster verification. Voting systems may adopt blockchain to ensure transparent elections. The metaverse, virtual reality economies, and Web3 platforms will rely on digital currencies for payments, trade, and ownership. In India, the